Dan, you manage about $600 billion in assets for your clients at Principal Financial. So let's talk about the stock market. What is your outlook for 2017?
Volatile. We look at 2016 as really a year of two halves. We had a very weak first half of 2016. Second half was much stronger on a number of different metrics. Lower unemployment, more people working, equity markets bounced back, and as you know, we saw a bounce in interest rates. So a lot of positive momentum. Oil also took a rise in 16.
Yeah, but what's your outlook for 2017?
So 17 is equally starting from a good solid base. Since the election, there's been quite a bounce in U.S. equities. Foreign currencies have been a little bit more challenging because of some of the threats related to trade and the impact it could have on some of the emerging markets. But I think generally we're going to be very pleased with a very solid 2017. So I'm optimistic about 2017. I think we'll see economic growth, GDP, north of 2%, but probably south of 3%. The big reasons why, there seems to be some untapped and some positive momentum on the part of consumers. This country, in the U.S., about 70% of the economy is consumers, and they're opening up their wallets and they're buying things and upgrading homes and furnishing their homes, all those things that maybe were pent up in previous years.
And so what does that mean for the markets?
I think the markets go up, but at the same time, I think it's not going to be one of those double-digit sorts of gains. But if you could get 6, 7, 8% growth in U.S. equities, I think we'd be well served by that. Now, what could cause that not to occur is a great deal of uncertainty about regulation, taxation, immigration. Those are all issues that'll be a big challenge for the economy to get over.
You know, for a while, Wall Street was euphoric about this so-called Trump rally, and now it's been going kind of sideways recently. What do you think is the most important issue for investors right now?
I think it's no different than what it's been in the past. Business owners to make investments like clarity. What's going to be my tax rate? How am I going to get my plant and equipment treated from a taxation perspective? Am I going to be tapped and impacted negatively by some sort of policy related to employment? Is there going to be a border tax which would cause my imports to be more expensive? The more clarity we can have on those key issues, the better off we're going to be.
Well, we certainly know that interest rates are going up, so the Fed guessing game is out of the picture. I mean, what are some of the other factors that could be a catalyst to move stocks from here?
Well, and I think what you have to look at is the underlying drivers that would cause the Fed to say they were comfortable moving up interest rates. And one of those is strong economic growth. One is less unemployment, more people at work. And then, of course, you just have the strength of the U.S. dollar. So there's a lot of reasons to think that you would want to head off any sorts of signs of inflation. And so we do think there will be 2 or 3 bumps in interest rates in 2017.
So what changes are you making to your investment strategy at Principal, given that we have a new president and some new policies coming along?
Well, as you know, at the Principal, we not only manage just short of $600 billion. Of that, we have a significant portion, more than half, that's fixed income. And fixed income can be negatively impacted on your existing book of business relative to the marks on the valuations of those securities. But at the same time, we're in the business of providing longevity protection for our customers. What's that mean? They want to purchase streams of income in retirement. You might call it annuity, but to our customers, it's the guaranteed income. You think about baby boomers, 10,000 a day retiring. What do they want? They want more certainty in retirement. So it's good for the Principal, it's good for our business to see interest rates continue to rise.
Yeah, but if I asked you this question a year ago or 2 years ago, you might have given me the same answer because you still have baby boomers retiring. These are still the major concerns. But given this environment that we're in now with a new president with a different view of the world, how are you changing your investment strategy, or are you?
Well, we're not dramatically changing the investment strategy. We've always believed that a well-diversified portfolio is the right mix, whether that's leveraging of municipals or high yields or preferred securities in addition to what I'll call traditionals. We are making promises to our customers that are 30 and 40 years long, whether it's a life insurance or disability or the investments that back those sorts of liabilities up, and of course annuities, lifetime income. So a diversified portfolio, consistent with what we've done in the past, will continue to be successful in the future. What could change that in 2017? A change in the tax policy. If all of a sudden municipals were going to be taxed differently going forward, that might have an impact and change how you went about investing that portfolio.
What are the chances that we will see a change in taxes?
I think 100%. There's going to be a change in taxes. And the question is, in most instances, there are going to be winners and losers by industry. And remember, when we're investing, we're effectively investing in U.S. and non-U.S. companies. The impact that a swing in taxes could have on an organization is not insignificant. Put a border tax on a large importer that's a retailer, that'll have a significant impact. Likewise, if you're a net exporter, you're not importing as much, you could see very favorable taxes show up to your investors.
Dan, we're now seeing the report cards of how funds did in 2016, whether they were actively managed or passively managed, and the passive ones seem to have done way better. I know you have both kinds
Right.
at Principal Financial, but when your investors ask you which investment approach should I go with, what do you tell them?
Well, I think the best thing they can do is have a very well diversified portfolio of securities. That includes domestic and non-domestic.
But I mean in terms of
equities.
active versus passive.
Well, I think, again, the term I'd like to use on that is lower cost investment options. I think that's really at the crux of this issue. At Principal, we manage a significant portfolio of both active and passive strategies across the various asset classes, and it really depends what the customer's looking for. Generally, if you think about where we have our strengths, preferred securities, high yield securities, mid cap, small cap, international, that's where you've seen passive strategies outperform the active very consistently. When it's down the middle, US, large cap, that's where the biggest struggle has been for investors.
So we're kind of in uncertain times. We don't know how businesses are going to do. We don't know how the economy is going to do. So what is your best advice to long-term investors who are saving for retirement, for example?
To the best of my knowledge, we've never had a very good predictability about what the economy is going to do. It's a little bit like my grandfather used to say, while you're making plans, life happens. Well, while we're making plans relative to the investments, frankly, 2017 is interesting, but it's not as interesting as 18, 19, 20, 21. So what's that mean? Diversified portfolios, looking for undervalued securities, looking for underappreciated and undervalued asset classes. And again, that's something that our portfolio managers are working on every single day.
So, I mean, what do you say? Somebody comes in and says, I don't know what I should be doing with my portfolios. I don't know what's going to happen this year, next year, this new presidency and all of that. I mean, what is your basic?
Number one issue, you step back from that, Susie. You step back from that conversation and say, what are your objectives? What is it that you're trying to accomplish? Is it to get the kids through college in 5 years from now? Is it to plan for your retirement, which is 20 years from now? Is it to afford a second home? So understanding what their priorities are, because that distance of time between when you need the money and how you're going to go about spending that money is really important. As you know, sequencing of return has had a dramatic impact on the person who retired in 2008 versus the individual who retired in 2002. Very different sort of sequence of returns for that individuals. So from our perspective, backing up, having a discussion about what their objectives are, what's their degree of comfort with volatility, because I do think we're going to be in a more volatile period of time, and then how much certainty that you want. Some people, they just can't take the volatility. Equities are a difficult place for them to be. A well-diversified portfolio is where they should be.
Okay, good answer. Thank you so much on that. Dan, President Trump has now been in office for about a month now. From your perspective, how's he doing so far?
Well, he's certainly been, he's been interesting, and he's been creating a lot of discussion and debate about some pretty important issues, whether it's immigration, whether it's tax, whether it's about business growth. Frankly, I don't think that anything he's done to date is inconsistent with what he campaigned on, which was change and that there was going to be a serious review of these various policies. And, the best thing about a democracy in having a government with two different parties with two different views is the way it's designed is the separation of government responsibility, good debates taking place, and my guess is the electorate, the people, ultimately decide if it's good policy. Well, so far there's just a lot of uncertainty about what the tax policies are going to be or immigration policy. But again, I don't think it's inconsistent with what's occurred in the past. There's going to be a lot of debate. There's going to be a lot of rigorous discussion. But my hope is that it works well for the people in the end.
Mm-hmm. So he is also talking about undoing DoddFrank, those bank regulations to prevent, that came after the financial crisis. What do you think about that? Are you in favor? Is the time right to do that now?
Well, I think what you first have to do is to understand why DoddFrank was put in place in the first place, and that's to protect the American investor. So let's make sure that there's ample capital to back up these liabilities that these banks and insurance companies are taking on. So I don't think it's just completely toss it out. I think there's parts of Dodd-Frank that maybe are a little bit too aggressive and would reduce individuals from being able to properly save for retirement and to provide the kind of credit availability to all borrowers that's perhaps what's needed.
So are you saying that banks aren't strong enough to go without these regulations? They still have to be supervised?
They've always had regulation. I think the question is how much regulation in order to strike the appropriate balance between having a society, which is a very independent society, that's very commercialized, that is based on a set of ideals and democracy, and making sure there's good disclosure and good supervision, but there is a delicate balance.
Mm-hmm. As you know, President Trump has been meeting with dozens of CEOs at the White House and saying that, you know, we'll cut taxes massively, we're going to cut back on regulations, but in return, hire here in the U.S., keep your manufacturing operations here. I know that that's not really applicable to you necessarily, but what do you think of this carrot and stick approach that he's using?
Well, again, I don't think it's inconsistent. I think sometimes how the message is delivered may be a little bit more dramatic, but I think all of our presidents have always viewed that having a strong domestic economy is good for American workers. And again, we have to recognize we're a very large exporter of our products and services around the world. You put a border tax into the U.S., my guess is we as exporters will have to deal with border taxes in other countries as well.
Do you think that these pronouncements from President Trump are galvanizing business, or is it putting CEOs in a bind?
No, I think it's just causing everyone to have to reflect on their strategy and determine where they want the plant, where they have the equipment. But let's make sure we don't lose sight of the real issue. You still have to have people that can do the job and want to do the job, whether it's in manufacturing, whether it's in data analytics, whether it's in engineering or manufacturing. So from a societal perspective, we got to make sure that we have schools and we have environments that are able to pump out the kind of labor force that's necessary to do the jobs that you're discussing.
Mm-hmm. President Trump says that his policies are going to jumpstart the economy. It's going to grow so much faster. How much faster do you think the economy is going to grow, given what you're seeing?
Personally, you know, if we've been running around that 1.75 GDP to 2.25, maybe gets up to 3%, I think people can underappreciate how difficult it is to take a very mature economy like what we have here in the U.S. and increase that by 50%.
Yeah, he's saying that he's going to double that or more.
I think it's always good to have good, ambitious goals, and then you have to set about going and achieving those goals.
Mm-hmm. As the CEO of a Fortune 500 company, what would you like to see President Trump do during this first term that would really help American businesses?
Well, I think number one is having certainty about tax policy, certainty about what the rules and regulations are going to be. I think to the extent that you can declutter overzealous rules and regulations that were made and make it easier and better for consumers at the same time, that's probably a pretty good outcome.
And what policies would you like him to back off from? What would you like to see him not do?
Yeah, you know, I'll just identify one because it strikes right at the heart of what our core business is, which is the fiduciary rule. I don't think anyone would disagree that you as a consumer should understand what you're getting and what you're paying for.
This is the transparency rule from the Department of Labor.
It is the fiduciary rule of the Department of Labor. The Department of Labor passed a regulation that's going to start going into effect here in April and then also 1/1 of 18 that was in trying to create more transparency for investors in qualified retirement plans. And in the effort to do that and try to do the right thing, what they probably did was prevented a lot of lower income people with not as many assets to have access to the appropriate financial advice that they really need. And so having choice, having disclosure, all of those things are very good, but a dialing back of that regulation would be helpful for the U.S. economy.
Okay. Dan, when you were tapped to become CEO of Principal Financial, this is the first time that you've ever held a CEO job.
Correct.
So what have you learned in this past year or so about what it takes to be an effective leader?
Well, what I tell you is the CEO is a unique job. There's one of one for every company, and no other seat in the company really prepares you to understand the level of complexity that comes to that particular office. And it is complex, and there's a lot of demands on time, there's a lot of demands on prioritization, and at the same time, you're representing, as the chairman of the board, the interest of our shareholders and the interest of management.
But think leadership. What's the most important leadership lesson that you've learned? I mean, what did you learn that you were president before? You've had a lot of leadership jobs, but as CEO?
Communications. You've got to constantly be reminding our employees what our strategy is, what our culture is, living the culture of the organization, communicating the culture of the organization, reminding people of what our strategy is, and then, of course, encouraging them to reach and satisfy the needs of our customers.
I don't know if you've heard this before, but it's been said that a good leader knows how to manage people, but a great leader knows himself. In your experience, have you found that knowing yourself is a precursor to being a great leader?
I think keeping your ego in check is always in good order, no matter what you're doing for any company, but I do believe that's part of it. My view is managers manage a process, leaders lead people. That's how I would distinguish the difference between managers and leaders. And clearly, as a CEO, your job every single day is to lead the companies in really three areas: making sure we have the right talent, making sure we've deployed our capital in an appropriate way, and make sure that our strategy is relevant.
Mm-hmm. You know, we're going through a time that there's a lot of pressure on companies to be more nimble, to stay ahead of being disrupted, to change things up. How do you know as a leader when it makes sense to do a transformative change and when to just make simple adjustments?
Yeah, I think that's a really good question. And where I start with is the customer. What's the customer demand? What's their expectation? My experience over the 33 years I've been with the organization is the more you stay grounded and focused on what are the needs of the customer, do that really, really well, and that'll force out all the impacts it has on your workflows, the impact it has on your strategy, and the impact it has on the organization in total. Now you've got to make that operationalized, and you have to make that work, and you have to make that equity sweat for our investors.
What are you doing to groom the next generation of leaders?
Collaboration. You know, I really believe you've got to have a collaborative environment. From my perspective, there's nothing more important than culture. What's the DNA of the organization? What's the ethos of the organization? If you don't have collaboration, if you don't have good teaming in today's day and age, if you're not able to work across your business lines and fully leverage the resources of the company, you'll be suboptimal. And today, you can't be a suboptimally run organization.
Mm-hmm. I know you're also trying to create a culture of innovation at Principal. What are you doing on all levels of the company to get all of your employees to take more risks, to try new things, to experiment, rather than going, the old-fashioned, comfortable way and playing it safe?
I think that has been in vogue for as long as business has been around. How do you create a workforce? How do you create an environment? How do you create a culture that is entrepreneurial in the sense where they're able to experiment and fail and still have that be rewarded?
What are you doing at Principal
So
to
what
cultivate that?
give you one example. We are in partnership with an organization called Plug and Play. Plug and Play is an innovation center that's located in Silicon Valley. We have people that will be working with these very, very creative entrepreneurs, trying to extract some of those great ideas, partnering with them, even though they're not employees, but partnering and hearing and understanding and leveraging their thinking and how we can bring that to our customers.
So what is your message to your executives and employees on every level about doing things differently?
Yeah, I think it's just that. I think it's having an open mind. The reality is this: if we can have self-driving cars, people will figure out much of what we do at Principal. So how do we add value to our customers? How do we differentiate our product relative to the competition? And at the end of the day, it's getting better outcomes for our customers. How do we set Susie up to have a very fulfilling retirement that she never has to worry about her financial security? That's a pretty great mission to be on, and it's one that we pursue every single day.
Dan, you joined Principal right out of college, so you've spent your whole career at the company. I'm sure you had a lot of mentors along the way. What's the best leadership advice you ever received, and why did it stick with you all these years?
The best piece of advice I got from my father, who got it from my grandfather, which is, you think you got a big problem, take 9 other executives, sit around a table, throw in the worst problem that you think you've got. By the time you hear the other 9, you'll find out that your problem isn't that big. And the reason it's not that big is you really do understand your business. You have to sometimes think about it a little bit differently, but it also is a reminder every single other industry, every other executive also has a big problem. Deal with the one you've got, leverage your knowledge, your skill sets in order to solve that problem.
And so why did that help you as a leader? Why was that good leadership advice for you?
It's good leadership advice for me because at times you can get a bit of a brain cramp, or you can get locked into a certain way of thinking when in reality, you know your industry, you know how to solve problems, figure it out.
What is the one leadership skill that you wish you knew when you took the CEO job, but you know it now?
Yeah. So I really think it's patience, and I'm an impatient person, and you expect people to come along on the voyage with you and that they're keeping up with you, when in reality, you have to retrace your steps from time to time, reiterate why we're doing what we're doing and why it's important. You make the assumption because you touch it every single day that the rest of the workforce is following along and they've got the same degree of understanding and they've prioritized it the same way. If it's something that's important to me because I think it's important to our customers and to our shareholders, then I have to continue to be patient and communicate it and communicate it and communicate it.
Not easy to do.
Not easy. It's a challenge.